Hello friends, our Honorable Finance Minister announced the budget on 1st of Feb 2026 wherein some of the changes with regard to GST have also been proposed. We will discuss those changes in this video today. The first change is with regard to post-supply discounts. Now, we all know that with regard to post-supply discounts, the recipient is now required to reverse their ITC for the supplier to be able to reverse their output taxes. That means if I am the supplier, I am issuing a credit note. I can reverse my output now only and only if the recipient can reverse their input. Now, after the IMS, this has become very prevalent where the recipient, if he rejects any invoice or rather any credit note, the liability of the supplier gets added back. So this functionality is already there. This condition is also there in the law. But there are a couple of other conditions which are also there with regard to post-supply discounts. First condition is that it should be established as per the agreement at or before the time of supply. That means at the time of giving discount, it should be agreed that on what conditions discount would be given. Second, it has to be linked to the relevant invoice. That is, against which invoice are we giving these credit notes. These two conditions are no longer relevant. So after this amendment gets notified, these two conditions stand relaxed. Now the only two conditions are that the supplier should be issuing a credit note and the recipient should be reversing the ITC. So they have made this process simpler. And the recipient, if he doesn't reverse the ITC, in that case the supplier's output taxes would get increased. So the government is making sure that they are not at a loss. Otherwise, all the conditions for credit note remains the same. That is, the credit note needs to be issued within, has to be reported within 30th November of the next financial year. All of that remains the same. But the discount is something which can now be given, wherein in the case of discount only recipient needs to reverse the ITC. Next is conditions for issuance of credit note. While this we know when can credit note be issued. First is where the taxable value or tax charged in the invoice is higher than the taxable value or tax charge for the supply. That means the invoice is issued for a higher amount. Or goods supplied are returned by the recipient. That is in case of sales return. This is also very frequent, very common. Deficiency in supply of goods or services. That means there is any problems in the quality of goods or services. But the most common reason for issuance of credit note, which is the discount, that was not discussed per se in section 34. That condition has now been inserted. So now one can also issue credit note for discount, which was already being done earlier, but it was not explicitly mentioned. So this is more of a corrective sort of amendment wherein I can now issue a credit note and give a post-supply discount, right? So in a credit note, I can show the post-supply discount, and this is one of the conditions for now issuing credit note, wherein I can also issue it for discounts. Also, provisional refunds. Provisional refund, 90% provisional refund has to be given within 7 days of the issue of acknowledgement. Within 7 days of the issue of acknowledgement, provisional refund has to be given. And acknowledgement is usually issued within 15 days of the date of RFD 01. So within 15 days of the issuance of RFD 01, RFD 02 has to be issued. So in other words, maximum within 22 days, ideally one should be getting the provisional refunds, all things remaining constant. Now, this provisional refund provision is applicable for export of goods and services and for supply to SEZ unit or developer, that is zero rated supplies. Now, this condition is also extended to refund under inverted rated structure also. So refund under inverted rated structure also now provisional refund would be applicable. Refund of less than 1,000. So as of now, refund of less than 1,000 is not permitted under law. So if the refund amount is less than 1,000, no one would be giving that refund. Having said that, in case of export with payment of tax, every shipping bill is treated as a refund application. So if I'm filing a shipping bill of 10,000 rupees, in that case, let's say GST on that is 5%. So 500 rupees would be the refund amount. So that refund amount would not be given to me because it is less than 1,000, which is per se illogical. Because of which, a lot of small value consignments, particularly in case of e-commerce industries which are exporting through courier mode, refunds were not available on export with payment of tax. So a lot of these people were filing exports without payment of tax refunds. So what they have now done is, because they might be having a lot of these consignments which are of smaller values and they are supposed to come in as refund under with payment of tax, they have now made this relaxation. That is, these e-commerce persons can now make exports with payment of tax, and this export with payment of tax would now be at a lower value. Even if the refund value is less than 1,000, that would be given. So most of these people who had now been filing refund under export without payment of tax, they would now move to with payment of tax, because this process is automatic and is far simpler. So a refund of less than 1,000 would also be provided for exports with payment of tax, which was not provided earlier. For all other refunds, 1,000 condition is still there. That means refund of less than 1,000 would not be provided. Next, advanced ruling authorities. In case of conflicting advanced rulings by different state authorities, so two states have given two different judgments. Now there may be certain cases where different authorities are giving different judgments. So in such cases, one had the option to appeal to the National Appellate Authority for advanced ruling. This provision had been made, but this authority never got constituted till date. Because of which, as of now, if in case of conflicting rulings, there is a problem that the authorities are not able to provide any final judgment on this matter. Now that the tribunal is around the corner, the government has now empowered any existing authority, including GSTAT, to take the place of the National Appellate Authority for advanced ruling till the time this constitution happens. That means it is most likely that GSTAT would now be hearing appeals against the conflicting advanced ruling judgments. Probably this would be done by the principal bench because it would be at a national level. Now, this is one area which was a huge area of litigation: intermediary services. That means a person who is not providing services on own account, but rather a person who is making sure he's arranging supply between two different persons, mostly an agent. An agent which is making sure supplies are arranged between two different persons. Now, for intermediary services, place of supply used to be the location of the supplier. That means fees paid to intermediary outside India was not regarded as import of services. Similarly, fees which is services which is provided by intermediary to recipient outside India was taxable. Why? Because supplier is within India and location of supplier is the place of supply, which is also within India. So it was taxable in nature. Similarly, if the intermediary which is located outside India and the place of supply of the intermediary is the place of supply, which is also outside India, it was not regarded as import of services. Now this amendment has been made. The concept of intermediary has now been removed from the GST law. Therefore, the place of supply for intermediary services would be considered as location of recipient from now onwards. So now, from now onwards, location of recipient would be equal to the place of supply for all intermediary services. So in other words, if any supplier is outside India and they are providing intermediary services to a recipient within India, in that case, it would be regarded as import of services. Similarly, any supplier which is the intermediary is within India and they are providing services to a recipient outside India, in that case it would be considered as export of services, right? So it would be considered as export of services on which tax would not be leviable. So that means this would now be regarded as export of services. So it's very simple now. If the supplier is outside India and the recipient is within India, it's import. If the supplier is within India, recipient is outside India, it's regarded as export, which was again creating a lot of confusions, because whether a supply is classifiable under intermediary or not was a huge area of litigation, which was now going to be relaxed after this amendment. With this, we come to the end of this video. I thank each and every one of you for giving me a very patient hearing. Thank you so much.